I may look more at the live cattle.
Hi, once again, everybody. Thanks for joining us here on the Comstock channel. I'm Marlin Bohling with you. It's always a pleasure to get to visit with you about anything ag related. And today we're going to be talking about the ag markets and what they did during the course of the week. Make sure you like these videos, subscribe to the videos by clicking on that bell icon down below, and you can share these videos with others as well. Today, my very special guest is Eric Relph of Comstock Investments. We'll take a look at how we wrapped up the week here, and we'll start on the grain sector. And I guess the gold star obviously goes to soybeans as we wrapped up on Friday. Man, they had a pretty good head of steam behind them, but they left the other grains behind. How come?
Yeah, I've been kind of scratching my head on this over the last several hours. And the big deal that I noticed was the soybean meal. And if you don't mind, I'd like to pull that up just a second.
Sure.
The soybean meal, from a technical standpoint, was pretty extraordinary today. Looking at the December contract, we had tried the 100-day moving average earlier in the week and failed from that level pretty miserably. Ground sideways for a couple of days. And then today, once we punched through that, the meal just took off. And the irony of this is this happened in the meal while this happened in the oil. And you can see the breakdown over the last 2 days. And actually, today was the first day since April of last year that we saw a daily flash sale of soybean oil, 20,000 tons sold to South Korea. The oil gets hammered, the meal explodes higher. And all I can figure is it's weekend, it's nearly month end, it's nearly quarter end. And we've got a quarterly stocks report coming up on Monday. So how much of this is just preparation and maybe a little bit synthetic? Could be quite a bit, actually.
Well, now that is a great point. Now we have the quarterly stocks report that'll come out Monday at 11 o'clock in the morning, right? Central
Yep.
time,
Yep.
noon Eastern time. I have heard numerous people say during the course of this month that could be the biggest report this month. What do you think?
It absolutely should be. The September crop production and WASDE report is usually a yawner. This month was no exception. We saw that come and go. No big moves there. This quarterly stocks report at the end of September, it's kind of a coin flip. You go back about the last 10 years, and in 1 year it will be extraordinary market mover, and the next year complete snoozer. So I don't know what to expect on Monday, but I know it does have the capacity to bring some real surprise, because I always say this is the first final look at old crop. And as ironic as that all sounds, this is the first major report from a stock standpoint that we get after the crop year has passed. And so 23-24 is in the bag. This is the quarterly stocks report. January reports become very important as well, but we'll get to those when we get there, I guess.
Interesting stuff. Well, the corn market didn't appear to really do too much. We are in the midst of harvest, and we have had a fairly decent little rally here in the last, 3 or 4 weeks, I guess.
Mm-hmm.
Are the farmers unloading? Is that what's keeping the lid on the market?
Yeah, I mean, you've had managed money is unloading their shorts, but that's being met in many cases with farmer selling. But I will say, I mean, we just saw our highest close in quite a while. And yesterday was the first time we saw a close above the 416 high that we had made several weeks back. And so we are seeing really good chart action out of the corn, but we are in the midst of harvest, and that can change dramatically. And with the quarterly stocks report coming up, that can also change things, whether good or bad. But we are hovering now very close to initial sales targets that we've set as a company and me individually with some of my clientele. And so, yeah, you're going to see the hedge pressure come, and we'll just see how this thing shakes out for the next couple of sessions.
Well, the timing is kind of odd. Now, I hear that October typically will show a little higher corn market. I guess seasonally it has a tendency to do that. But it seems like it would be hard to rally in the middle of harvest, and especially when you look at a daily chart. I mean, it's kind of with soybeans there where it looks like it's kind of overbought right now. I don't know how much higher you can go in the face of that.
Yeah, I mean, that's definitely a weight, right? It's a burden that we have to overcome if we're going to continue to move out of here. And in the case of the corn, I mean, we've not had big broad ranges. It's not like soybeans, not even in the same ballpark, not even at their normal ratios. And so the corn, where it moves 10 cents, you're like, wow, we had a pretty good rally in the corn. 2 years ago, we'd see 10 cents a day and not think anything of it. And so now we're back into this mind frame that we were in 3-4 years ago. Well, 5 years ago, man, years go by too fast, where a 3 cent move and you're like, oh, what got into the corn today? And that's kind of the mentality right now. And so while we haven't broke out higher or lower, we've just been kind of in this grind. It is favoring the top side and it's not breaking down too quickly. So all of that is really good signs. And today did it without any help from the wheat. So that was impressive as well.
And that leads me to my next question. I was just going to ask you about the wheat. I was looking, well, in this case, at Kansas City wheat for December. I mean, it looks like it's coiling up. Why would that be?
It's planting season, and we're trying to figure out what's what and how much moisture there's going to be. And I think what people have a hard time recognizing, and you know the realities of this, like I do, Marlin, and that is it really doesn't matter a whole lot. Not this time of year, not as much as people would think. You know, it's not like planting corn or beans in any soil moisture. It matters more. Okay, will it come up? Most likely, because it's wheat, right? It's a weed. But what happens in April, that becomes very significant. And so right now, I think there's just this tug of war between regions, and are they going to get any moisture? Or are they not? But more than that, it's the global picture. And that's been the big driver all along. We've been following Paris milling wheat around. The U.S. markets have. Paris can't really get legs under it because Russia continues to undercut the market. And not by a lot, but they continue to undercut the market no matter what the price is. And so if our markets are struggling, Paris and U.S. markets are struggling, then Russia will just drop their price a little more and remain the cheapest on the global cash market and continue to move wheat to fuel their war machine.
Now, it used to be, from my coverage of the markets, it seemed like wheat was most susceptible to be influenced by whatever happened in the U.S. dollar index value. And I see where today the dollar index dipped below par value today.
Mm-hmm.
And gosh, when's the last time we saw that? That's been a long time.
Yeah.
It's dropped quite a bit here recently since the interest rates got lowered, but yet the wheat market couldn't respond. And I thought that was a little bit telling too.
So I don't want to date your history in this industry by any stretch of the imagination, but you know, the U.S. the U.S. is not the global supplier that we used to be, not by any stretch of the imagination. Therefore, the relationship to the dollar becomes less significant. So, you know, you think back to things that used to matter, and it just really, there's not much correlation anymore.
Well, yeah, we walked around in togas back in my day, but anyway.
Kickstart the car.
We'll see if it gets back to that again or not. But I thought that was interesting. It used to be it would do, kind of the opposite of the dollar, not so much anymore.
Yeah.
Anything in the equity markets or the financial markets before we get into livestock here that caught your attention this week?
Yeah, I mean, today alone, you make a new high, all-time high in the Dow Jones, and that's being driven by some massive gains in overseas markets, primarily in China. The government announced this stimulus package. They're going to throw $150 billion in the economy and try to put a Band-Aid on a broken leg and see if that heals it. And you know, it's all kind of a moot point, but it is providing some short-term euphoria to some specific stocks and some specific industries. But at the end of the day, I think they're just kicking the can down the road. And again, not really going to do any good by the time it's all said and done.
But what about all this talk that the sky is falling and we're going to head into recession? The market is just getting overheated, and throwing money at the problem is just going to cause more inflation once again, and maybe runaway inflation. It's like nobody wants to believe that on Wall Street. Why?
Yeah, well, I think there's a little bit to credit the Fed with here. I mean, I'm almost done with my private pilot's license, and the phrase in aviation is they greased the landing perfectly. And they said they were going to do this. They needed to do it this way, and they needed to do it for this long. And they somehow avoided running off the end of the runway and hitting the grass on the way in. And it just was, they did it right. And so there is some justification to that sentiment that everything's hunky-dory and off we go. But, what the delay is and the housing market relationship, pricing versus interest and all these things, that's going to take another couple of years to sort itself out. Right now, though, it looks like they did their job to the best of their ability and did it well.
But if things are that great, why do we keep hearing about more big layoffs?
Yeah, I don't know. Ask John Deere.
That's
Yeah,
a good point too.
I mean, it's there are sectors of the economy that are going to struggle mightily through all of this. The Nasdaq's just been explosive for the last year. That's been driven by primarily Nvidia as a specific stock, but chip making in general, AI development, all these technological advances that we've seen over the last couple of years that are coming to fruit, and some of these IPOs that have done really well, most of them being tech heavy. So there's still that. The energy sector's been performing well, although you look at crude oil today, it doesn't look all that pretty when on a chart. But all in all, your energy sectors have been doing well, your tech sectors have been doing well, and so it's hard to dampen that mood when you have such major assets like that performing quite well.
Okay, so let's look at livestock. I mean, that was about as uneventful as I have seen a livestock close, especially to wrap up a week like that. Very in non-convincing, kind of a meandering market here as we head into the weekend. We did actually have kind of a mixed lean hog market, and didn't we have a hog and pig report out?
Yeah, hog and pig report yesterday at 2:00, and they made adjustments to both the June and the March reports because it's the USDA and they can't do anything right the first time, so we got to try it on the third go around. And so they go back, they make the adjustments, and turns out we have more pigs than we thought we did, which with the kill numbers like they've been, everybody's been talking about, well, we're going to run into this shortage. We're going to run into this shortage. And the kill numbers haven't wavered. And so we've thought all along there's probably more in the pipeline than what they're talking about and what they're knowing about, what's being reported and what we're hearing from the USDA. And turns out that was the case. So the kill numbers stay up. But, the futures market did really well, absorbed that fairly well today. Like you said, pretty non-eventful. I don't know how much we're going to be able to sustain if this longshoreman strike comes through for more than the anticipated week. We've already got backlogs on the West Coast. We've got a hurricane plus a longshoreman strike on the Gulf and East Coast. We've got the rail embargoes with UP and BNSF on the Mexican border. This is it's an interesting dynamic, and I think it's impacting how people are looking at both the hog and cattle markets right now.
Speaking of the cattle market, how are the wholesale prices holding up now?
Beef's been in a struggle, no doubt about it. We lost several dollars this week. One day we lost $3.70 in the choice cuts. Another day we lost $2. Another day we lost $1.25. Gained 50 cents back in the early reporting today, but I'd be surprised even if that holds to the close. But beef has been on a downhill slide. And the interesting thing about this is at the same time, you got packers paying $2 to $4 more for cattle, mostly $2 more live and $4 more dressed in the same week that box beef has a massive decline. And so I can't help but think that they're trying to juice prices today to procure supply for the next 2 to 4 weeks, because that's what they'll do with a lot of them, is if they can meet their immediate needs, and they'll try to buy more cattle at the same price to meet the deferred needs, to maybe work through some of these logistical issues that are going to screw up their little game they've been playing with the import-export market, getting both cattle and beef from across borders and overseas, and sending less out. So if they have to throttle back on that whole scenario, then they may need some supply for a little while, and a nice positive week in the face of lower beef, even while they're being advertised as having negative margins, could get it done.
What do you look at as typically being a leader? The wholesale beef trade, the box beef market, or the cash trade?
Generally speaking, the beef. So the boxes to me are the biggest deal, and because everything is a derivative of that, in my opinion. Now, on a week-to-week basis, I may look more at the live cattle, fed cattle cash, or the beef, but generally on a longer-term view, it's always the beef.
Now, if we roll the calendar over, of course, Monday is going to be the final trading day of September.
Mm-hmm.
Then we get into October. Is that going to cause any funny things to happen in the market? Is there going to be any rolling of positions or anything like that going on?
Not a lot as far as cattle go. They're definitely not.
I mean, in any of the ag commodity markets.
Yeah. So really, the only thing you're going to see is as we get through that first week of October, you'll start to see you'll start to see it in the cattle more than anywhere else, because October feeders and fats are heavily traded months. They are right now the spot months, but they won't carry those late into the month. Even though the feeder cattle are cash settled, they'll start to wane interest by the 10th of the month. So immediately, no. But as you get closer to the middle of the month, you'll really start to notice it in the cattle market.
All right. Did you have anything from your morning comments on Friday morning that you kind of wanted to maybe talk about for just a second that wasn't included here?
Well, no, you got to pay for that. No.
Well, give me an idea. What did you talk about?
No, so this morning immediately I started off with the cash cattle, and how was playing out, because a lot of our clients are feeders and they need to be selling cattle, and so they need to know what's going on with the market, and that's something that's a little bit difficult to find. So I always kind of spearhead with that. That way they know first thing in the morning what the cash market did the day before, whether before the 2:00 reporting deadline or even in a lot of cases after that 2:00 deadline. Because we do have a lot of clients that know that we're reporting this, and so they'll text me, "Hey, I sold for this, I sold for that," whether it was to a regional or a major. A lot of times they'll get that information direct from them and then have that to report first thing in the morning. In addition to that, just looking at this week, I actually did one video that was all technical, just looking at where we were at and on the charts and some retracement level targets. And of course, within our premium subscription service, we offer hedge recommendations for producers. I think we got some really nice soybean sales done this week. And if it starts raining in Brazil, that'll prove to be true, I think.
Yeah, exactly. And I think a lot of people aren't even aware of what you do in the morning commentary. There's a whole lot more information, a lot more specific information that you guys put in there. And it's great stuff. I mean, I've been doing this for, let's say, close to 3 decades now. Right? Yeah, we were all wearing togas in the beginning. And I always learn a lot every time I have a chance to catch your morning commentary. You do a video along with the newsletter in the morning, and just I always learn something every single time. So it's amazing all the stuff you can dig up. But kudos on that. I encourage everybody to check that out too. That's our premium content, and you put that out twice a day, right?
Yeah, it's usually out by 7:10 in the morning, and then around 4:00 in the afternoon, depending on how fast Marlin works that day.
Yeah, right. Okay, because they will include my podcast too. All right. Well, I appreciate that, Eric. Good to visit with you, and have a good weekend. We'll catch you next week, and then we'll have the quarterly stocks report to talk about next week. Okay, well, in the meantime, I hope everybody out there has a good weekend. Thanks, Eric, for the time. And for producer Brianne Hendrickson, I'm Marlin Bohling. We'll get you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.